Friends, I have a company called Panth Infinity Limited. It has backed a 35 crore order from Richa Info Systems. During yesterday's session, the stock rallied up 16% after securing the 35 crore order. The market capitalization is 12 crores, 0.16 lakhs, and the share was trading at 759 yesterday, up 1 rupee 1 paisa from the previous close on Friday. However, it has corrected since and currently trading at 7 rupees and 9 paise. The purpose of the order is to provide goods and services on an order basis as per the client requirement. The aggregate value is 35 crores. Time of the order to be executed is 1 year. Indian company primarily engaged in trading of precious metal stones and jewelry with a registered office in Gujarat. Company was incorporated in 1993, changed its name to Panth Infinity. Company has entered into e-commerce segment to promote existing and newly launched brands. Company is a EB2B platform, helps sellers in areas like technology, marketing and promotion, sales, advertisement, etc. Company's revenue surged by 696% from 1.65 crores to 13.14 crores. That is from Q2 FY25 to Q3 FY25, whereas the net profits surged 246% from 32 lakhs to 1.11 crore. Important disclaimer: all investment opinions and recommendations mentioned are solely those of the respective experts, broking houses, and rating agencies. The views do not reflect personal opinion or advice. Stock market investment carry inherent risk of financial loss. Investors must exercise own judgment and conduct proper due diligence. The author bears no responsibility for any losses resulting from the decisions based on this article. It is strongly recommended to consult a qualified financial advisor before making any investment decisions. We'll go through some more details. This is the current price, showing that it is down 2% today. Overall, in the last 5 days, that is including yesterday, it is showing still 6.5% a positive trend. Last 1 month, 5% positive return. Last 6 months, 4% positive return. Then over the last 1 year, it is showing a negative of 9.5%. And this is the logo on the right hand side of the company. And you can see market cap on one side is showing 25 crores. Price to book value 0.64, which is amazing. Face value is 10. Book value 11 rupees 24 paise. Cash of 9 lakhs. Debt 0 debt. Earnings per share 26 paisa in the last 12 months. Sales growth 8%. A return on equity minus 11%. Return on capital employed minus 11%. Profit growth minus 5000%. So these are all old numbers. The most recent one we'll just quickly go through. These are the peer comparisons. Price ranging from 40 paise to as high as 100 rupees or 632 rupees, with a market cap of between 25 to 27 crores. Now, what is important to look at is the price to earnings ratio 663, which is very high. That means the company is not performing well. Dhyani Trade Ventures again 40, which is pretty high. Vega as well as 95, pretty high. So all these companies are small companies. I'm not really sure it's worth doing some analysis. However, uh, the pharma company and the BD Udyog are two companies that you can look at. Satwa Sukan Life Care, again, not really sure what the company deals in, but you should look at what the company does and what the sector business performance can be from a growth perspective over a period of 5 to 10 years. Then you can see return on capital, you can see Dayani Trade Ventures about 15% return on equity. All others, nothing really to look into. Then we look at the public holding of this company, 100% public holding, which means the stock is going to be highly volatile in terms of price and in terms of volume. No promoters, holding the FI is 0, DI is 0, others 0. So all the shares are held by the public. So any negative sentiment can draw the stock uh, pondering down, and at the same time, if the company gets uh, relatively big order compared to what is currently received, and it gets business in range of 100 crores uh, on a regular basis, then you will be able to see that the table of this company would change. The company would start doing well. It will be on a bull run, and quarter on quarter results are really going to be what will drive the growth in this company. So company is debt free, company has healthy liquidity position of 135, company has poor profit growth minus 216 in 3 years, company has poor revenue growth minus 4% in the last 3 years, poor return on equity of minus 3.2 in the last 5 years. So it's a loss making company if you look at a 3 to 5 year perspective. Company has high debtor days of 193, which is gone further up. Company has negative cash flow, that means it's not able to generate enough cash flows from its operations. Tax rate is low. Company has low EBITDA margin of 1.25 in last 5 years. Company is trading at a high EBITDA of 62. Company is trading in precious metal, stones and jewelry. High of 9.69, book value 11.8, return on capital of minus 2.8, face value 10 rupees. Company has delivered poor sales growth of minus 21% over the last 5 years. Working capital days have doubled nearly 4 years. Company has working capital requirements of 4 years, highly due to old stock, old stock which has been manufactured and company is not able to sell it. Capitalizing interest costs, these are some other peer comparisons. You can't say that this is an apple to an apple, so really nothing much to compare. Possibly some business lines may be similar to what these companies are also offering. That is the reason why there is a comparison between these companies. You can see sales in the past 9 months, 12 months. You can see December quarter has been the most amazing quarter. Sales of 13 crores, then profit from a minus to 1.5 crores, net profit overall 1.11 crores in the December quarter. Then you can look at the sales on a yearly perspective, 14 crores expected this year, profit expected about 91 lakhs, so which is a good sign. So there would be some price momentum once the financial results for March quarter 2024 come up. You can see expected business is 14 crores. So this quarter the business supposed to be good. If it doesn't get a good financial result, you will see the stock coming down further again because it will not be meeting its expectations. You can see this is nothing really to go about. Profit growth 129% in the last 1 year. Sales growth 147% in the last 1 year. CAGR price minus 7%. Return on equity minus 3%. Reserves have grown, which is a good sign. Borrowings have also grown, so something that the company would need to keep a track of. Borrowings are high, 57 crores, and the cost of servicing this debt is going to be high, so company would need to be very, very careful because easily this can turn into a loss-making venture. As it is, the company has not been performing well in the last 4 5 years. So you can see the debtor days have gone from 635 to 1380, which is double, nearly 4 years. Working capital requirements almost the same, 4 years. That is it, friends. Thanks for watching. It was important for me to share this company because this came into the highlight after receiving this order. The company price started doing well, and at the same time, public has also um, taken an input and sold some of its stake, and possibly some of them may have booked some profit, or they must have booked some of the losses, expecting that the company may not be able to uh, grow further immediately in the short run. So thank you for watching once again. We'll see you with another video.